Okay, we got Orlando in the house. All right. We'll go ahead and get started. So getting started, guys, it first starts with your why. Oh, wait, someone else. Okay. Miami Gardens, Florida. Okay. All right, Kendrick. All right. So it starts with your why. So in the chat, and I'm gonna tell y'all in the chat a lot because I wanna be interactive here. So I want you to tell me your why. What is your why for home ownership? Is it rent is too high? Is it generational wealth? What is your why for home ownership? What is your why? In the chat, tell me your why. Why do you want to do it? And you can say rent is too high. That's fine. I agree with you. So what is your why? What is your why? All right. Generational wealth, investment, saving, and more. I like the and more, right? Because it's like, hey, if there's something else, you want to get that as well. So yeah. All right. So let's talk about the benefits. Let me move my head out the way here. Move it like down to the bottom. There we go. All right. So what are the benefits of home ownership? So one, you have appreciation. Appreciation is because homes tend to increase in value. Now I say 10 because there are some years where they can go down. But overall, when we're looking at a 5-year, 10-year, 20-year span, they're going to be increasing. But we had 07, 08, 09 where home values did dip, right? So, but overall, if you're looking at a 5-10-year span, home prices are going to be appreciated. You have tax benefits. So if you're talking to your CPA, you can see mortgage interest, mortgage insurance, and property taxes. Those can potentially be eliminated, right? Are just a benefit for you. We have credit builders. So mortgage, when you get a mortgage, that's a new trade line, right? So when you have a new trade line and you pay it on time, that's going to be boosting your score, right? And then lastly, we have a predictable monthly payment. Now, notice I say predictable because your principal and interest is fixed. But if property taxes go up, if homeowners insurance go up, your payment will go up by that amount. But your principal and interest will be fixed. Okay, so those are some of the benefits. And let me check the chat really quick. Yeah, Kendrick said generational wealth. Okay, perfect, perfect. All right, so let's keep going here. All right, so where do we even start? All right, where do we even start with this? So in this, I'm going to be covering the process, the paperwork, and the professions. And I do have the chat like open. So if you have any questions, just put it in the chat. You can also unmute if you want to show your face. You can do that as well if you have any questions along, but feel free to always stop me. But I do kind of like look up at the chat. So if you have any questions or if something doesn't make sense, just post it there and we can I can stop and answer that question for you. All right, so the VA loan is backed by the Department of Veteran Affairs, the VA. So they back the loan. Now they don't originate the loan. So you would still come to me, a loan officer, to get the loan. So it kind of confuses people because they feel that the VA loan is oh, the VA loan, I got to go to the VA. No, the VA backs the loan. You will still come to a loan officer such as myself for a VA loan. So the VA, the Department of Veteran Affairs, they back the loan, but they do not originate the loan. You still need a loan originate. All right. So what is the requirements for a VA loan? So let's look here at the active duty requirements. So if you've served at least 90 continuous days all at once, no break in service, you meet the minimum active duty requirement, right? Now, if you serve between 1990 and the present, go forward to present, right? You'll meet the active duty requirement if you had at least 24 continuous months, right? Or 90 days for which you were called ordered or active duty. So these are the requirements. They're straight on the VA website. I do have the link on here too. But effectively, you can always just request your COE. Your COE is your certificate of eligibility. That's your golden ticket, right? That lets us know you qualify for a VA loan. So again, from the VA's website, you can actually just click and you can request your COE. You'll put in your information, but guess what? I'll save you time. So lenders, we actually have a portal, right? It's called Web LGY, where we can get a copy of your COE. So if you're working with me or any other lender, when we have your information, we can actually request it through the VA through our special portal. So you don't have to worry about if you qualify or not. If you're in doubt, just reach out to us and we can see and we can pull that COE. You can also request it by mail, but it's 2024. We kind of don't do things by mail. So any questions before we proceed with COE, your certificate of eligibility? Any questions about the COE? Because that's basically, if you have one, you're able to get the VA loan. If you don't have one, you'll have to wait until you have a COE. Here's actually here's actually a copy of the COE, the certificate of eligibility. So what you're going to see, right, is you're going to see your name, you're going to see your branch, right? The funding fee, if you're exempt, it'll have exempt there. And then again, if you're new and you haven't done a loan before, a VA loan, this is going to be blank. It's going to look just like this, all right? But if you have done a VA loan and let's say you're refinancing or maybe second use, then you'll have the information for that VA loan here. We'll have the VA loan number, the state, loan amount, date, entitlement, all that right there, right? What you want to see on here, VA basic entitlement 36. So that is the standard basic entitlement is 36. And then it'll show if you have any previous VA loans and what that entitlement charge is, right? So here's just a COE. Here's what it looks like. And they'll have exempt there. It'll have your name and they'll have your service or your branch. All right. Any questions on the COE, your certificate of eligibility? And again, as lenders, we can pull this ourselves. So if you're in doubt, just reach out to us and we can go in our system and we can pull it for you. We can let you know if it's there. All right. So VA entitlement, I did talk about this. So you have that 36,000, right? That's going to be your basic, which is your full entitlement. You do get a bonus entitlement that doesn't have any limit. Partial entitlement, this is more so if you've already bought with the VA loan and you're looking for another VA loan or you're looking to see how much more you have. It's kind of a calculation. So like reach out and we'll like do it for you. But it's going to be the lesser of 25% of the loan amount or 25% of the county loan limit minus the amount of entitlement you use and not restored. So if that confuses you at all, just reach out and we can kind of do that. Again, this is going to be more for second time use, right? So here's a VA residual income chart. So what this is, and sorry, it's kind of blurry, but ultimately residual income is how much money you have left over after all of your bills are paid. So that's going to be your mortgage, right? So your mortgage plus car, cell phone, credit card, all of those things, that's residual income. Because effectively, guys, the VA loan goes off of residual income, not debt to income. So FHA, VA are capped at a certain amount. VA loans, you can go with a higher debt to income, right? Because it goes off of residual. And here's the areas. I'll go back and forth really quick. So if you're like in the Northeast, those are those states. If you're in the West, those are the states right here, right? So according to this chart, you just need to meet the residual income requirement for said area. If y'all hear me, if this is making sense in the chat, go ahead and put Roger. Put Roger in the chat if y'all are hearing me. If this is making sense so far, put Roger in the chat. Put Roger in the chat. Roger. All right, cool. All right, Kendrick. All right, let's go a little further. All right, so the benefits of the VA loan. So again, you have zero down, right? FHA conventional, you're putting money down. VA, you can put zero down. You have no mortgage insurance. So for FHA loans, you're going to have mortgage insurance, right? For conventional loans, the mortgage insurance falls off. And Sierra said, Roger. All right, Sierra. But for VA loans, you don't have any mortgage insurance. Also lower rates than conventional loans. So since the VA loan is backed by the Department of Veteran Affairs, right? That backing lowers the risk. Lower risk means lower rate. So you're going to have a lower rate for a VA loan as opposed to a conventional loan. And then, as I mentioned, I was harping on just earlier, it goes off of residual income, not debt to income. So what that means is it just allows a higher debt to income ratio. So I have some of the benefits here. So in the chat, I want you guys to put one of the benefits of the VA loan. Put one of the benefits of the VA loan. You got zero down. You can say, hey, no mortgage insurance, lower rate, higher debt to income. But in the chat right now, put one of the benefits of the VA loan. And this is just like top four. There are others as well. No mortgage insurance, right? Right. Okay. All right. So let's say if you're like, hey, Conrad, I want to buy a multifamily with my VA loan. So you can do that. We're going to ignore some of this. This is going to be conventional loan right here. Freddie Mac, Fannie Mae. This is going to be FHA. Right here is going to be VA. So if you're saying, hey, I want to buy a 2 to 4 unit and I want to use the rental income, here's what that looks like. One, we need reserves of 6 months of the mortgage payment. So PITI, right? And also, we do need experience of you managing rental units, our background involving property management, maintenance, things like that. So here's the thing. Let's say if you want to buy a duplex, maybe your income qualifies and you don't need to use the rental income from the other unit. You can still get that duplex. You see what I'm saying? So it's not necessarily, oh, if you want to buy a multifamily, you have to wait. If you and your income can qualify for the duplex without using the rental income from the other unit, you'll still be getting it. But if we can qualify you alone with just your income, you can still get that duplex or maybe that tri or that quad. But if you want to just go from renting to a multifamily using the VA loans, I want you to know the qualifications now so you can start to work backwards and meet them. All right. So again, if you want to do a multi-family or a multi-unit for your primary using the VA loan, you're going to want 6 months of PITI saved, and you want to have experience with managing rentals or background involving property maintenance. All right. So another thing with the VA loan is we have VA manual underwriting. So what happens when we do a home loan, guys, is we run it through our system. That's called the automated underwriting system. It's called AUS, right? We click a button. It's going to review your file and it's going to let us know the findings. So the findings we want are approved eligible. So we click the button. So that's after we run your credit, we put your income in, your assets, and it says approved eligible. Ding, we're good. If it doesn't kick back approve eligible, if for some reason it's like refer eligible, then we have to do what's called manual underwriting. So manual underwriting is where the underwriter will look at your credit report, trade line by trade line, and see if you qualify. The main thing with manual underwriting, guys, is we need timely payments on all trade lines for the past 12 months. So no lates or anything like that for the past 12 months, right? The DTI can get as high as 55, sometimes higher if you have 2 compensating factors. So right here, low payment shock. So we're looking at how much is your current rent versus what's the mortgage going to be. A large down payment. So if you have some monies to put down, right? Do you have that? 3 months reserve. So do you have some money saved, right? Do you have a part-time or other documented income that's not used as qualifying income, right? Do you have a side job? Do you have a large residual income? So again, remember that's how much are you making minus all your debts, what's left over, right? Do you have a non-borrowing spouse? Have you been at your job for at least 2 years? Now that's at that job, not in the field, but at that job. And then do you have a history of getting promotions, pay raises? So if you have any of these 2, it's going to help your case to get that 55 or higher back-end ratio. Because when we're doing a manual, we will be looking at debt to income. So question, does a manual loan look at debt to income? In the chat, tell me yes or tell me no. Does a manual VA loan look at your debt to income? Yes or no? Tell me in the chat. No. All right. Yes. Yes. So a manual VA loan, again, they will be looking at debt to income. This is just for manual. This is just for manual, right? But if we kick it through the system, it says approved eligible, we're good to go. So a manual underwritten loan will look at your debt to income. If it's automated, there's no issues. We won't look at the debt to income. It's just residual income. All right. Let's go a little further. All right, so steps to home ownership. So we're going to talk about preparing for home ownership, getting pre-approved, getting connected with a realtor, find a home, make an offer, have a home inspection, appraisal, clearing underwriting conditions, closing on your home, and maintenance. So we got a few things to talk about. All right. So preparing for home ownership, guys. So we have your assets, income, and credit. These are the three things you need for a home loan. So somebody in the chat, somebody put assets, put income, put credit in the chat, put assets, put income, put credit. So these are the three things you need for a home loan. So assets is saving for the down payment, the closing costs, and reserves or other expenses. So with VA, we can put zero down, right? Boom, we don't have to worry about the down payment. Do know that there are closing costs associated with every loan. So the way it can work for VA, if you can get seller credits, they may cover some or all of the closing costs, right? And then reserves, if those are needed, you might need 1 to 3 months reserves, depending on your scenario. And then other expenses, like, are you moving, right? That's, you're going to have to move, you're going to have to buy new items. So keep that in mind. Assets, right? Income. Income is the next piece, right? Income, for your income to be utilized, it needs to be durable. So that's, are you receiving it right now and set for it to continue for the next few years? So no finna, gonna, shoulda money. So if you're finna get a raise, we can use it when you actually have that raise. If you're gonna start a new job, we can use it if you're actually starting that job or you have like an offer letter. So the money and the numbers we use have to be what you're getting right now, and they have to be set to continue. And then last piece is credit. So with credit, many loan programs, they have credit score minimums, and you can get better pricing with better credit scores, right? It's not only your score, but it's your profile. So you have a 700 score, but do you have any lates on your car or credit card, right? You have a 620, but again, do you have lates? Do you have collections, charge-offs? So it's not just what is your credit score, but it's also what does your credit profile look like? Are you paying things on time? So assets, income, and credit. Those are the three things you're going to need for a home loan. All right, so assets. So this is mattress money. So when we're looking at a mortgage, we cannot use mattress money. So any and all of the funds that we're using, they have to already be in a bank account seasoned for 60 days. In the chat, somebody put 60 days. Put 60 days in the chat. Put 60 days. So if you have money under your mattress in a safe, at your auntie's house, you want to make sure as you're prepping for home ownership, if you're going to use any of those funds, that you drop it into the bank account. It needs to be there for 60 days, right? So effectively just plan ahead. So 60 days. So no mattress money, put all the funds into a bank account before we purchase. Nothing from a safe, nothing from wherever. Put it in a bank, let it sit for 60 days, then we can use it. Let's see what the chat says. 60 days, 60 days. All right, cool. All right, so income, again, no finna, gonna, shoulda money. It needs to be durable. So you need to be receiving it right now, set for it to continue for at least 3 years. So eligible income, we can use W-2s, we can use dividends, Social Security, VA disability, foster if you're a resource parent, child support, alimony, child support if the child is under 15, because you have to begin it for 3 years, right? If you're getting child support, alimony, or things like that, we mainly want to see that you have that court order and that it's actually hitting your account, right? So we want to make sure it's still hitting your account. They want to make sure it's not just court ordered, but you're actually getting it. We can use commissions, we can use bonus, we can use overtime. Typically, we're going to need a 2-year history of it. Sometimes we can get away with 1, but that's just to average it, right? If you start your job, you've only been working for 4 months and you got $10,000 in bonuses, we don't know what it typically looks like for a year, right? So we want to see, because jobs, especially like commission jobs, they may fluctuate throughout the year. So we want a full picture of a year so we can see exactly how much you're average to make. So usually 2 years if you're using bonus, commission, overtime. Sometimes we can squeeze by with 1 year, but we at least want a full year if we want to use bonus, overtime, or commission income, right? Recent pay raises. So we can use recent pay raises. Usually it's just going to require the most recent 30-day pay stub to show that, right? And then possibly like a verification of employment. That's something we'll get from the employer ourselves, and maybe like a letter of explanation. But again, that's something I would craft up with you and help you submit that into underwriting. But again, income, somebody in the chat put durable. That's the main word for income. It just needs to be durable. Are you getting it right now? Have you been in this line of work? Is it set to continue? Durable is a word for income. Durable, whatever we can't discriminate on income. So it does not matter where you're getting it from, as long as it's verified that you're getting this and it's set to continue, we can use the income. Let me see in the chat. Durable. Okay, all right. Credit. So with credit, we do a tri-merge. So tri-merge is Equifax, TransUnion, and Experian. Those are the 3 big bureaus, right? We'll use the middle score. So for multiple borrowers, we're going to use the lower middle score, right? So question. Husband's credit score is 700. His middle score is 700. Wife's middle score is 660. Which credit score do we use? Remember, if we have multiple, we use the lower middle. So husband's middle is 700. Wife's middle is 660. Which credit score will we use? 660, correct. Yes, because we're going to use the lower middle score, right? So, and another thing, check your credit months before. So if there are any discrepancies, you have ample time to fix them. Sometimes it can be hard if you come last minute and you're like, hey, Conrad, I need to purchase in a month or 2 months. Cool, I can get you pre-approved. But if there's any issues on your credit and you have to write a letter or, contact this creditor and get this removed, that could take time, right? So if you know and you're anticipating that and you look at your scores months ahead of time, if there's anything wrong or sketchy, you can get it omitted or removed in enough time to where you can purchase. So you can go to annualcreditreport.com. This is where you get a free copy of your credit report. If you want a free copy, annualcreditreport.com. All right, so what makes up your scores? So you have a few different things. I hope this isn't blurry, but I'll just go through it. The main thing is going to be payment history. This is simply paying your debts on time. So paying your credit card, paying your car loan, paying your student loans, paying those on time, right? 35% of your overall credit profile. 30% is capacity. So that's if you have a credit limit of 1,000 and you've used up 900, you're at 90% utilization, right? So if you have a credit limit of 1,000, but you only owe 100, that's at 10%. So the lower your utilization, the better, right? They don't want you like maxing out or near maxing out your credit cards. So that's the utilization part. And then length, having it, not for 2 months or 6 months, but have you had this card for a year, 2 years, 3 years? It's very important, right? If you know, hey, I want to buy a house in maybe a year or two, I would say, hey, go get a credit card, right? Go get a credit card and keep the utilization low. So now you're going to have time with that credit card, right? You're going to have low utilization. That's going to push your credit up, right? Free game. I just gave you a free game right there, right? So that in of itself, your payment history, right? 35%. Your capacity, 30. So that's 65. And then we have 70, 80. So 80% of your credit report is simply paying your bills on time, keeping your utilization low, and then having those trade lines for some time. That's 80% right there. We're good. And then mix of credit. So, you know, car loan, student loan, credit card, personal loan, right? That's going to be a mix. And then accumulation of debt. How much of that was in the past 12, 18? All right, the big numbers for your pre-approval is going to be one, how much are you comfortable paying? How are you comfortable paying? 2,000, 3,000, 1,800? What are you comfortable paying? Second, how much can you qualify for? Based off of debt to income ratio, with VA loans, it can go slightly higher, so like 50, 60%, right? So how much do you qualify for? And then lastly, what does the mortgage payment work up to be? So again, these are the big three. So if you say, hey, Conrad, I do not want to pay no more than $3,000. I say, okay, cool. Now let's see how much you should qualify for a ballpark. And let's see, hey, based off of that city and that purchase price, the monthly payment should be about 2,800, right? That works. You said 3,000, monthly payment will be about 28. So before we proceed and do a full application, let's make sure what are you comfortable with, and let's make sure the mortgage payment works to be that or under to make sure we're even on the right page. All right. So what can you qualify for, right? So we're going to take the mortgage payment is PITI. Really, it's A as well. So somebody in the chat put PITI. Put PITI in the chat. Put PITI in the chat. So P is principal. That's the loan amount, right? Purchase price minus your down payment. So if you're putting zero down, it's just the purchase price. Interest rate, you can go to Mortgage News Daily. That's a good filler for what the interest rates are. You can call me and we can talk about like where the market is, right? But Mortgage News Daily. Property taxes, that's assessed by the county. So you can check like the county clerk, or you can check, I have a website here, smartasset.com, where you can see what the taxes are. And then insurance, mortgage insurance, homeowners insurance, and then an HOA if applicable. So those are the different insurances for said property. And again, remember with VA, we don't have to worry about mortgage insurance. All right. So you plug those numbers into a mortgage calculator. I have a few and you can find some online pretty quick, like, you know, mortgage calculator. And then that'll tell you an estimation of what the monthly payment looks like. So it's kind of the long way, but it'll give you a good feel of what your mortgage payment ballpark should be. And let's see the chat, PITI. All right, all right. So y'all are tracking, So here's Mortgage News Daily. I actually might just take y'all to the site really quick. Actually, yeah, let's go to the site. All right. So here's the site, Mortgage News Daily. It has a ton of different like articles, right? So it has a ton of articles. So you can keep up with mortgages. And let's look at today's rate. So you can see, hey, that's 30-year fixed. That's conventional. 15-year conventional, jumbo. Here's the VA. So look at this, guys. That's conventional, and then that's VA. So remember I told you they're backed by the federal government. That backing helps lower the risk. So, and then here's the market right here. So you can kind of see, and you'll see the dates. If you just track it, trail it, it'll kind of tell you where the market is. So you don't need to click on no weird internet sites and put any information in. You can come straight to Mortgage News Daily and you can get a ballpark of where the market is. This is telling us, hey, right now, mortgage rates for VA will be about 6%, right? All right, so let's go back. All right. Property taxes. So again, if you want to kind of get a ballpark of property taxes, you can just put in like you can either do the zip code or the city, right? And it's going to tell you the county property tax rate. And now you'll know the percentage to put in if you're trying to calculate what a mortgage payment is and how much you qualify for, things like that. So that's just smartasset.com. You go click on taxes, and then you can put in your city, your zip code, and it'll tell you the tax rate for that county, property tax rate, so you'll know what the property taxes are for that area. Then if you go to, this is realtor.com. right? If you look for a home in the same area that you're looking to buy, so look for a home in the same area you're looking to buy at the same price, you'll be able to use a homeowner's insurance because the policy, if you're buying a house in that area, same price, the homeowner's insurance should be about the same, right? And then HOA as well, that'll kind of give you a ballpark of what the HOA is if there's an HOA. And if for whatever reason y'all weren't tracking me on this, you can always call me because I do the numbers all day. So I can kind of help you calculate a mortgage payment and put together the game plan. But sometimes for those that are like independent and you kind of want to run the numbers on your own, I want to show you again how to run the numbers. So let me go back. So again, your mortgage payment is principal, interest, taxes, and insurance. Principal is going to be your purchase price minus the down payment. Interest rate, mortgage news daily, right? To put in the interest rate. Taxes, smartasset.com. You can put in the property taxes for that area. And then the insurance is the homeowner's insurance and HOA if it's applicable. You plug all that in and it'll show you what the mortgage payment is. Or just call Conrad Van Mortgage Man. Either works. All right, so how much you can afford. So we're looking at the debt to income ratio. So your monthly minimum obligation that shows on your credit. Plus your mortgage divided by your monthly income before taxes. So let me explain that again. So you're going to take, do you have a car loan? I think we have a question. One sec. Okay. VA don't. Yes, correct. So for veterans, yes, that is correct. For veterans, you don't have to worry about mortgage insurance. Or for veterans, you don't have to worry about mortgage insurance using a VA loan. So no mortgage insurance for veterans. So debt to income, what we're looking at here, guys, your minimum monthly obligations. So one sec. So that's going to be, do you have a car loan? What's the monthly payment? $700. Do you have a credit card? What's the minimum monthly payment? $80, right? So we take that 700 plus the $80 plus your mortgage payment. We divide that by your monthly income before taxes. That's going to show us like a debt to income ratio, right? So how much you qualify for is the maximum loan amount you can get. How much you qualify for is the maximum loan amount you can get. How much you can reasonably afford is the maximum loan amount you should get, right? So you're pre-approved for $500,000, right? But you're not comfortable with a payment over $350. So you qualify for 500, but you probably want to stay at that 350 range or whatever you're comfortable with based off of your situation, your circumstances, right? So how much you qualify for is the maximum you can get. How much you can reasonably afford is a maximum you should get, right? All right, so we talked about preparing for home ownership. The other ones will be pretty light. They're not going to be like super meaty like that. But if you're liking the information so far in the chat, go ahead, put like a fire emoji. Put Roger, put a fire emoji. Give me something. If you're liking the information so far, put a fire emoji, put Roger, give me some communication in the chat. Roger. All right. All right. All right. All right. So getting pre-approved, right? So we talked about, hey, the Department of Veteran Affairs backed the loan, right? And so you have to go to a loan officer such as myself or another entity or company. So getting pre-approved, the loan officer will need three things. First, a full application to run your credit and your supporting documentation. Your documentation is going to vary depending on your situation and your scenario, right? Depending on, hey, where do you get your income from? Because that's going to determine what documents we need. So the application, don't let this scare y'all. It's not like a test or anything, right? It's simply questions that you already know the answer to. So we're just asking for what's your name, what's your date of birth, your social, your sex, your marital status. We're looking at a 2-year work history. So what positions that you held, what's the employer's address, and what was your salary or your income from it. 2-year residency, so where have you lived for 2 years? Your asset information, Chase Bank, $10,000, or USAA, Navy Federal, 8,000, 5,000. Your asset information, and then property information and loan amount you're seeking. So you're looking at Florida. So we're looking at Miami Gardens or, Miami, Florida, and then the loan amount or the purchase price ballpark, and then demographic information. I want you guys to remember that the demographic information, it's not to discriminate. It's actually the opposite. So the federal government, they pull all of our loans and they're looking, hey, the females versus the males, how many of them were approved or denied? Okay, the African-American women versus the Asian men, how many of them were approved or denied? So they'll use that for statistical purposes. So they actually use that information to help see if there's any discrimination. But your demographic information will not change at all your loan terms, because that's illegal. So the demographic information is used by the federal government when they're looking at our loans, just to see what are the statistics for the different groups and their approval rates and things like that. All right, so documents, again, like if you're a W-2 worker, right, you can expect government issued ID, so the driver's license, passport, past 2 years W-2s, past 2 years tax returns. We may not need the tax returns if it's just like W-2 income, right? Or your LES, your leaves, so we can use that for your pay stubs as well. So retirement account, if we're using that, award letter if applicable, and then your certificate of eligibility. My head's kind of in the way, but certificate of eligibility, right? But again, as lenders, we can actually pull that as well through our system. So basic standard documents. If you have any questions based off of your scenario, like I'll tell you kind of what documents we need if your scenario is a little different. Advisory. Do not commit mortgage fraud. Do not. So mortgage fraud is investigated by the FBI. So somebody in the chat, tell me the federal agency that investigates mortgage fraud. In the chat, tell me the federal agency that investigates mortgage fraud. 3 letters. Let me see. FBI. FBI, yes. So no fake pay stubs, no fake bank statements, no fake jobs. I don't want to hear, yeah, I used to work at Kmart or Toys R Us and it's like out of business. Like your information is checked about 3 or 4 times. So me as a loan officer, I'm going to check it. Goes into processing. Processor's going to look at it. It goes into underwriting. The underwriter's going to look at it, right? Before it funds, there's a quality control. And then when you do a mortgage, guys, you sign what's called your borrower's authorization. That authorization gives us the ability to check and verify any information that you put in your file, right? Now, I'm not saying if you made like a slight omission, right? Because sometimes we forget or your pay is a little different. That's why we get pay stubs, right? And we verify things. But I mean like blatant, like you just like lying, like blatantly. So don't do that because your information is checked. And keep in mind, like all we do is look at documentation all day. So we can spot like the fake like that. You know what I mean? And even if for some reason I didn't catch it, it's going to be caught. You will be found out. So just don't commit mortgage fraud. There's a bunch of people that do like, fake pay stubs or whatever, maybe for rent. You shouldn't do that. But especially for mortgage, it's really going to be scrutinized. And like I said, with that borrower's authorization, we have the authority to call your bank and verify your account information. We have the authority to call your landlord and verify if you rented there and how much, or even your former employers. So just don't do it like this. He said, he thought shit was sweet. He lied on his loan application. So yeah, you can have jail time. You can have a fat fine. You don't want it. So do not lie, because it will not be Conrad that comes after you. It's going to be the FBI. So keep that in mind. Just, straight and narrow. Just reach out to me. I'll tell you what you need to get a home legally. So you don't have to pay a fat fine or be in jail. All right, so getting pre-approved, these are some other loans, right? So we have the FHA. So sometimes some people want to go FHA, right? You're going to have upfront mortgage insurance. Is good for first-time home buyers. You can do multifamily or mixed use. If you don't know what mixed use is, that's like think of a multi-story where the bottom is like a storefront and the top is like housing, or even three, where it's like store, house, house. So that would be a mixed use property. You can do FHA loan, mixed use property. It's not too common like on the West Coast, but in like the Midwest and like New York, they'll be more popular, right? So typically lower rates than conventional because it's backed by the federal government. So FHA loans are backed by the Federal Housing Administration. So conventional, no upfront mortgage insurance, slightly easier on the appraisal requirement. Monthly mortgage insurance can automatically fall off. So the VA loan, we right here, y'all. Powerful, it's for service members, right? Zero down, it's backed by the veteran and veteran affairs. It does require a funding fee, but it can be waived if you do have service-related disability, right? Also, too, another thing I forgot to mention this is with VA loans. I just love VA loans. So with VA loans, you can actually be omitted from property taxes depending on your state if you have a certain disability ranking, right? So if you're 75, 80% or more in certain states, you don't have to pay property taxes. So, and these are some other loans. So let's say like maybe you're in the service and now you're like a contract worker. If you're showing it on taxes, we still probably want to do a VA loan. But if not, we can do 1099 where we just show the 1099s, no taxes. Bank statement. So if you're in the service again and now you're self-employed doing, you have a business or something like that, we can do a bank statement loan where we use 12 or 24 months of bank statements, right? No tax returns needed, but it will require a down payment 10%. Same for profit and loss. Again, these are like for business owners, entrepreneurs, and things like that. If you are showing your taxable income and you're a service member, we probably want to go VA. You're going to have literally zero down, no mortgage insurance, and a better rate. But if you're not doing your taxes and maybe you're self-employed, there are other options outside of the VA loan for you, which you can reach out to me and we can talk about. All right, so here's a loan estimate. So when you're doing a mortgage, when you're doing a home loan, you're going to get federal disclosures. This is one of those. So with this, we'll kind of go through it. You want to look at the date it was issued. You want to make sure your name is correct. You want to make sure that property address is correct and the sales price, right? Then you're going to have the loan term. Is it a 30-year? Is it 25-year? Are you purchasing or refinancing? Is it fixed or adjustable, right? And then the loan type. So we want to make sure here it's VA, right? Because if you're a veteran and you submitted your documents and you want that lower, better rate and no mortgage insurance, you want to make sure the loan is actually a VA loan, right? Not conventional FHA. And then is the rate locked? Yes or no? So you have the loan amount here. You have the interest rate here. Look at that interest rate. Y'all like that interest rate? I don't know if it's available. It's not available right now, but when it was, wasn't it good? Yeah. And then you have the monthly principal and interest, right? So can these amounts change after closing? No, no, no. Right? So those won't change after closing. Prepayment penalty, usually this is going to be a no too. Prepayment penalty is if you pay it off early, is there a penalty for it? So no. So you can pay it off, and really usually you're not going to pay it off, right? You're going to do like a refinance, which effectively is refinance. You pay off the loan, you get a new one. So there's no prepayment penalty. Balloon payment, that's after the loan. Is there like a fat amount due? So usually that's no. And then here, the only difference you'll see, and I was trying to get a loan estimate for VA and I couldn't get one, guys, but you'll see here the mortgage insurance falls off after a few years because on conventional, they hit that equity threshold. But for you guys, for VA, we don't have to worry about mortgage insurance. You won't have it. So your estimated payment will be about the same. Principal and interest, right? Mortgage insurance, that'll be cut. And then you'll have the escrows, which is taxes and insurance. So keep in mind, it says this can increase over time. So again, if the property taxes or homeowners insurance increase, your payment increases. So it's not the principal and interest, right? That's fixed. But if property taxes or homeowners insurance go up, your payment will go up by that amount. So let me move this over because I do kind of want to go over this for y'all. All right. So estimated closing costs and then cash to close. What's the difference? Closing cost is the cost to do the loan. Closing cost is the cost to do the loan. Cash to close is all the money you need to bring to closing. So again, with VA, you won't have a down payment, but what are the closing costs? So if the closing costs are $8,000, then your cash to close will be $8,000 if you're bringing zero down. Now, keep in mind, seller credits. If we get seller credits to cover some or all of this, at closing, you can walk away with a check. So if you talk to service members, there are times where they say, hey, I went and did a loan, and guess what? At closing, I got a check back. How that works is if the closing costs are, let's say, $8,000 and you get a seller's credit for $8,000, then it covers and you're not coming out with anything out of pocket. But it's down payment plus closing costs. That's your cash to close. Closing costs is the costs and fees to do the loan. Cash to close is how much money you need to bring in to close the deal. Here's the second page. So in box A, you're going to have like the loan points or the charge for it, application, underwriting fee, processing fee if there is one, right? All that's here. Box B, you're going to have like your appraisal, your credit report, flood certification, tax monitoring fee. These are the services you can't shop for. That'll be right here. C is going to be the title work and then like a pest inspection, right? So that's going to be in box C. And then D, as you can see, is A, B, C added up. So here's A, here's B, and here's C. So A, B, and C together is going to be D, right? And then same over here, guys. So you'll see I is E, F, G, and H. So E, F, G, and H. So let's go through this. So if there's a recording fee to record with the county, that's going to be listed there. If there's a transfer tax, that'll be listed. Prepaids. So right here, the prepaid interest. So depending on the day we close, that's going to change. So like, let's say January, if you close January 1st, you have prepaid interest from the 2nd to the 31st. But if you close like January 30th, you'll only have prepaid interest for one day. So prepaid interest is going to vary based off of the day you close. And then we have property taxes, homeowners insurance as well. We'll collect a few months for that up front. So if you're shopping lenders, basically what you want to look at is box A for the most part. Here's why. Services you can't shop for, those are going to be uniform, right? Your title work and your pest inspection, that's based off of title, that's title fees, and then the pest inspection fees. So if you're shopping lenders, right, you want that best deal, you want to mainly be looking at box A to see what are they charging you and what's the interest rate. So in the chat, tell me what box you should be looking at if you're shopping lenders. What box should you be looking at? What box should you be looking at? Box A, box A. Good job, good job. Because that's the lender fee. So you're like, hey, what's the interest rate you're going to get me? And then what's the cost for that rate? Because all of these other fees are pretty much going to be the same. Your homeowner's insurance is based off your homeowner's insurance. The recording fee, that's based off of the county, right? So all of these fees are going to be the same regardless who you go with. You want to look at box A. You want to know what is the interest rate and what is the cost for the rate. Let's come down here a little bit. D&I. So D&I together. So D, remember, is ABC. So that's A, B, C, right? And then I is going to be these right here, right? E, F, G, and H. So E, F, G, and H. So all together, all the fees together, $8,054, right? And lender credit, if we had one, right? And so we have that there. And then we have the down payment. So was there a down payment? Deposit, if you do a deposit. So VA, it depends on where you buy. Sometimes you may not have to do a deposit. Sometimes they still want like 1 to 3% of the sales price, right? Then you'll have a seller's credit. So again, if a seller's credit is there, that's going to be listed. And then you'll have estimated cash to close. So this is just a full breakdown. So again, when looking at your loan estimate, it's mainly page 1 and page 2. That's the breakdown. Page 3, no one really uses page, but it'll have like, if you work with me, right, you're going to have my license and contact information here, right? And then also you're going to have the bank information as well. But that's page 3. Any questions on the loan estimate? Any questions? If no questions, say Roger in the chat. Any questions on the loan estimate? Any questions? If not, say Roger in the chat. Roger. Okay. All right. So we talked about preparing for home ownership, right? We talked about getting pre-approved. Let's talk about connecting with a realtor. So connect with a realtor. So the 3 things you want from your agent is knowledge of a local market. So you want them to know the population, jobs, future development, schools. They should know and understand where you're buying, right? Second is going to be their availability. So are they only weekends, right? Are they available at nights? You want to know what is their availability and does it work with you and your schedule? And then lastly, competitive edge / offer. You should be able to ask any agent, hey, why should I go with you? And they should be able to tell you or articulate an answer that should make you comfortable with trusting them. Because if they can't negotiate for themselves, how are they going to negotiate for you? So those are the main 3 questions. If you're ever looking and you get pre-approved with me, I always have a list of real estate agents that you can kind of call or screen or reach out to. If you get pre-approved with me, don't worry, I can get you connected with the top agent in any market. But these are the 3 questions you want to ask them. You want to know what their knowledge of the local market is. You want to know their availability, and then their competitive edge or why you should go with them. Also in the chat, do I have any agents in the chat? Any agents on this Zoom in the chat? Any agents? Any agents? You say your name and then what market you're in. All right, Taz. Taz, what market are you in? What market are you in? For Florida. So right there, if you're in the chat, you can get connected with her. You can get connected. All right, so finding a home, right? With respects to our budget, you want to know how much you qualify for. Let me see. Hey to all my peoples. Oh, she said hey. Okay. Sorry. So with respect to your budgets, right? Because remember, what are your budget? What are you comfortable with? How much can you afford? We want to make sure we get that right. Now you're pre-approved, you know your budget, and you're going shopping within your means, right? So your realtor will put you on a property search within the areas that interest you at the price points that work for you. Again, we want to make sure you're comfortable with that price point. If you're qualified for 500, but you only want that mortgage at like a $300,000 payment, then we don't want you looking at $500,000 homes unless you're willing to pay more, right? So we want to make sure what you're looking at is within what you can afford and what you're comfortable with. So your realtor will put you on a property search, and you'll like look at and you'll find a few homes, right? So what are some of the costs before you buy? So you're looking at credit report for the lender, be about 75 bucks. Pest inspection can be about 600 or so. Home inspections may be about 700. Appraisals 500 to 800. It really varies by where you are in that market, right? And then earnest money, as I mentioned, it could be 1 to 3%. Some new construction, they can be 0 down or like very little down as well. So that kind of varies. Remember, these are some out-of-pocket expenses, but if you get enough seller credits that cover this, that's how you can close and get a check back at closing. So do know there may be some out-of-pocket expenses that you can be reimbursed for, or if the seller credit covers it, you can get a check back at closing. And who wouldn't want a check back at closing? You know what I'm saying? All right, so make an offer. So after you toured homes, you found a home you like, you're going to go ahead and let me move my head. With your pre-approval and your purchase contract, well, you're going to submit an offer. You're going to submit the offer. So you're going to take the pre-approval. So you get that from me. Realtor's going to write up an offer, and boom, we're going to submit that. All right, so let's talk about escrow. So escrow is a neutral third party to facilitate transactions. So it works like this. Let's say you were buying an expensive car. So party A has a car, $50,000. Party B, not Cardi B, party B, has the 50,000. So if party A gives the car away first, then what if they don't get the money? Or party B gives the money, what if they don't give the car? So in this, it's kind of a you first, no, you first, no, you first, right? You don't know if you can trust the other party. Escrow is set up just for that. It's a neutral third party. So escrow has instructions, and escrow follows those instructions, and every party will get what they agreed to with those escrow instructions. So you don't have to worry about you first, no, you first, or are they gonna, go get over on you? You don't have to worry about that with escrow. That's what it's for. So it's a neutral third party to facilitate transactions. So opening escrow means you're starting the exchange, right? You're starting the exchange. Closing escrow means the exchange is complete. Falling out of escrow means the exchange did not complete or did not go through for whatever reason. So if you're on like Facebook, Instagram, you'll see people, oh, we opened escrow. That means they're starting the process to purchasing. Oh, we closed escrow. That means, hey, pretty much it's done, right? They closed, sold, funded, all that. Falling out of escrow, it means the transaction didn't go through and all parties will be returned whatever they put into escrow, right? If the exchange wasn't complete. Does that make sense? If y'all tracking, say Roger. Say Roger if you're tracking on escrow. Opening escrow, closing escrow, falling out of escrow. Say Roger if you're tracking. All right, Roger. Okay. All right, so appraisals can come back as is or subject to. So subject to requires a second inspection with the issues brought up to be remedied. So if there's an appraisal that's done and they say, hey, the roof needs to be fixed, or the roof needs to be fixed, then the roof needs to be fixed, and then the appraiser needs to go back out there after it's fixed and say, yes, it's been fixed, right? So appraisals can come back as is, meaning it's good, or subject to, meaning repairs are needed for the property. So if it's as is equal to the sales price, we're good. If it's as is greater than the sales price, we're good because you have equity, right? So you got under contract for $350, the appraisal came back at $370. Cool, you have $20,000 in equity, so that's good. We want the appraisal as is, what you purchasing it for or more. But if it comes back at a value less than the sales price, then we have to negotiate with the seller to lower the price. You'll need to come up with a difference, or we can try to challenge the value, right? So those are the three options. Typically, the first one is we would show the seller, hey, Mr. Seller, the home didn't appraise. Can we get this property lowered so we can proceed and move forward? But real estate, guys, as you can tell from this presentation, there's a lot of moving parts, a lot of different people. So sometimes things aren't straight and it can be clunky, right? Because you'll have, well, we'll talk about the professions later. There's multiple people, multiple parties, multiple moving pieces. So sometimes it's not as streamlined, and you want to make sure you're working with a loan officer that knows these things and an agent that knows these things to kind of set the expectations and get everything up front. So to make it as smooth as possible, because it can be clunky at times, right? So, all right, so we talked about preparing for home ownership, getting pre-approved, connecting with realtor, finding a home, making an offer. Now we talk about home inspection. Home inspections are not required. Somebody in the chat, question, are home inspections required? In the chat, let me know. Are home inspections required? In the chat, let me know. Are home inspections required? No, no. Good job, good job, good job. No. So home inspections are not required, but they are highly, highly advisable. You want to make sure you're checking this is what they're checking: ground, structure, roof. exterior windows, doors, trim, interior bathroom, plumbing, electrical. You want to get a home inspection, especially if there's something wrong with that property. And if you got an inspection, you could have got that fixed, or you could have got some credits. You had some fighting power. But if you don't get an inspection and something is wrong after you move in, that's on you, right? So it's highly advisable that you get one. It's not required. Highly advisable. Highly advisable. And then the appraisal. So the difference between the home inspection and the appraisal mainly is appraisal is going to come up with the value. They're looking at, hey, what's the square footage of the home? So that's going to be that. So appraisals, they are required. Home inspections are not required, just highly recommended. All right. So when we do your loan, right after your appraisal is complete, your loan submitted into underwriting. The underwriting is verifying person, property, and paperwork. In the chat, put person, put property, put paperwork. In the chat, put person, put property, put paperwork. That's what the underwriter is looking at, the person. So who are you? Are you a legal entity, right? That's why we get your ID. That's why we're verifying your social and your jobs, right? The person, right? The property, does the property work, right? Is it a dilapidated property? If it is, we got to do like a renovation loan, right? Because we're not going to lend on a property that's not, fixed and functioning. And then the paperwork. What's your paperwork? What's your W-2s? What's your LESs? Your IDs, your bank statements. So the underwriter is verifying the person, that's you, the property, that's what you're trying to buy, and then that's the paperwork, everything you submit. Person, property, and paperwork. Underwriters will condition any documents they need. After all the conditions are satisfied, the underwriter will issue the clear to close. So question in the chat, who issues the clear to close? Who issues the clear to close? Who issues the clear to close? Underwriter. All right, underwriter. Yes, the underwriter will issue the clear to close, right? So as a loan officer, I'm going to take your application, get your documents. We're going to order the appraisal. We're going to submit all your documents to the underwriter. They're going to look at everything and they're going to say, hey, I need X, Y, and Z. We're going to get them X, Y, and Z. We're going to submit that. They're going to review it and they're going to say, okay, we're good. We're satisfied. And then you close on your home, right? So you close on your home, you're happy, you're celebrating. But we don't stop there. I don't like to stop there. I like to go further and just let my clients know what it looks like after. So there's 3 things that I'd recommend. Changing your locks, deep cleaning, and estate planning. So 1, changing your locks. You have no idea who had keys to that property, right? You just got it. You just moved in. You don't want somebody coming in your front door or back door. Change the locks, all of them, right? And this is, again, why I said in the assets, you just don't want down payment, closing costs, but also like moving. This is an expense that I don't think you cannot afford to have, right? You want to change the locks when you move into your house. So you want to get the locks changed. You have no idea who had copies, how many copies they had, where they're at. Change the locks. First thing you do when you move in, right? And then also a deep clean. So yeah, I know you saw the house. It looks pretty. It looks nice, but there can be bacteria, gook, filth, things like that in little crevices. If you can afford it, you really want to try to get the home deep clean, right? You want to get it deep clean. And then lastly, you want to talk to a real estate attorney. I can connect you with one after, but you want to look at setting up a living trust, right? Because probate is basically where if anything were to happen to you, God forbid, and you had heirs, before they can get the property, they have to go through probate, which can cost thousands of dollars and a lot of time. That's how many families lose homes. So it's not just, we're not just getting you a home to get a home. We're getting you a home to build generational wealth, right? So you really want to look at this piece after. So you close on the home, cool. You can contact me or your agent after. Let's get you connected to a real estate attorney to talk about what is a living trust, what it looks like, how to set it up, and more about the benefits of it, right? So it's not just, oh, come to Conrad, do a loan. Let's get you a loan, but let's make sure after you change the locks, let's make sure you deep clean the place. Let's make sure you have a trust set up so your investment is protected, right? So that's what we did. We talked about preparing for home ownership, getting you pre-approved, connecting with an agent, finding a home, making an offer, home inspections, getting an appraisal, clearing the conditions, closing it, and then payments. So here are the professions. You have your loan officer, that's me. So loan officer is I originate the loan. So I verify assets, income, and credit. I issue you what's called the pre-approval. So I say, hey, you're pre-approved, 500,000, 200,000, whatever the amounts come to. You have your loan processor. They're going to collect and clear conditions. They'll like work under me, right? You have the underwriter. The underwriter make the final judgment call to lend. They issue the clear to close. So again, I said this again. I'm going to say it again. Who issues the clear to close? Who issues the clear to close? What profession issues the clear to close? Put in the chat. Put in the chat. All right. Underwriter. All right. And you have the buyer's agent and the seller's agent. So the buyer's agent, they're going to help you find a home, negotiate terms, and review the contract. So again, if with this being the biggest purchase, right, you want to make sure that you have representation. So you can, you don't need an agent, but I highly, highly recommend it because what they're going to do is they're going to review the terms, they're going to negotiate, they're going to help you get those seller credits. And again, if you haven't bought a home before, you don't know the process, so you can get taken advantage of, right? Just by not having representation. Seller's agent, they represent the seller of the home. They're going to do the negotiation for the seller, right? The home inspector, they inspect the home, right? The appraiser, they appraise the home. The title rep, they're going to verify who owns the property right now and then who's going to be having ownership, right? And then they make sure there's no liens on the property, things like that. So they make sure it's a smooth transaction because you don't want to buy real estate only to find out that person didn't really own it, right? You want to make sure that person owns it. I'm buying it. When I pay this money, the down payment, the closing cost, I really own this property. So that's what title does, right? They verify that person really owns it. And in this transaction, you're now going to own it. And no one can come after you and say, hey, that was my cousin's house. He didn't really own it. I owned it or whatever. Insurance agent, they're going to issue insurance for the property. So you have insurance brokers we can connect you with. You can consider a bundle policy. So whoever your car insurance is with, you can reach out to them and ask for a quote. And then real estate attorney, that's where my head is. I'm gonna move right here. So then you have the real estate attorney. In some states, they are responsible for closing. And then you can reach out to them after to set up trust and things like that. All right, let me check the chat. Sorry. Underwriter. Okay. Buyer's agent. Yeah. Okay. All right. So let me move my head again. Sorry, y'all. My head is just big. What can I say? My availability about 8 a.m., but sometimes it's like 7 Pacific to about 10 because I'm here in Cali. Ends as well. I'm not 9 to 5, right? Closing usually going to be about 2 to 3 weeks. It just depends on you, your file, your scenario. There's a lot of like what ifs, but if everything is clean and there's like the credit is good, and, title's good, the appraisal's good, we're probably going to be closing in about 2 to 3 weeks, right? These are the current states I'm licensed in. I think I'm actually missing a few, but yeah, I do service Florida, Georgia, Illinois, Maryland. My company's in 48. So if I'm not licensed in that state, I can send you to a coworker and they can help you out as well. So yeah, I'd love to work with you, especially if you're on my webinar. Like, I mean, you come to get the information. I want you to work. All right. So you're like, Conrad, why? Why should I work with you? All right. So traditionally, you might think of home when you think of money and home loans, you might think of your bank or your credit union, right? Wells Fargo, USAA, Navy Federal, wherever you bank with, right? So if you go there, you have a branch manager, they'll have a regional manager, they'll have a vice president, they'll have a CEO, then you have the bank. You have this hierarchy and a hierarchy of fees. When you work with me, Conrad, through Nexa Mortgage, I actually shop wholesale lenders. So wholesale means they aren't consumer direct. So you cannot go to the lenders I go to directly. And because they're wholesale, you get discounted rates, discounted pricing. So I'm actually able to get you a good deal because I cut all out and I'm able to close fast. Another thing too is the flexibility with my lending. So flexibility meaning I have a ton of different products. So again, we talked about VA manual underwrite. So if you're isn't the best, right, I'm still able to shop for you and find a good deal. But that's on, you will get an email after with my info as well. And then you can follow me Instagram, Conrad Van the Mortgage Man, Facebook too. I'm very findable, very findable. So that's pretty much it. Here's some resources. So on the resources, this is what we kind of discussed or went over. So mortgage interest rates, right? Mortgage News Daily, some calculators, FHA handbook. I have the VA handbook as well. I think I got a question in the chat. Oh, hand clap. Okay, thank you, thank you. So those are the resources. And yeah, so do you guys, this is the end. Do you guys have any questions for me, particularly about VA loans or any loans in general? Any questions? Any questions y'all got? VA loans, me working with me, how to get a loan, which we kind of did just cover. Any questions, any questions, any questions? No questions? All right, did you enjoy the webinar before we kind of head out? Did you guys enjoy it? Was the information helpful? Was this helpful? Let me know in the chat. Say yeah, fire emoji. Say yeah, kinda. Let me know in the chat. Was this information? Well, thank y'all for coming. Let me see. Wait, I got some delayed. Very valuable information. Yes. Can we get the video afterwards? Yeah, I will be sending y'all the video. Let me just I gotta, what is it, like compress it or whatever. But yeah, I'll get y'all the video for this. No problem. But all right, if you have any other questions about VA loans, just contact me. Can I use the FHA and VA at the same time? So no, so the FHA or VA. If you are a veteran, usually you want to go VA because you don't have that mortgage insurance. So typically, if you're deciding FHA, it's usually going to be VA. But you're getting one home at a time, so you either do a VA loan or you do an loan. But if you want like a side to side comparison, when I'm running your file, like, I can tell you like, hey, if you go FHA, here's the numbers. Go VA, here's the numbers, and you can see which is best. Kendrick. Cool. All right, y'all. So if y'all have any other questions, contact me. Okay, thanks. Yeah, you're welcome. No problem. If y'all have any other questions, contact me. I'm gonna sign out. Check your emails. I'll have the playback available. Give me like 24 hours. But yeah. Thanks for coming to my first time homebuyer VA masterclass. I'll talk to y'all. Peace.